Hi everybody. Today we're going to talk about just the regular and simple breakouts, but you should understand one very important thing. In order to understand the breakout, the way it works, you have to understand the material, what it comes with. I trade for 25 years from 1998. It's very easy to check. You can go on Finera and check when I begin trading. I began trading in 1998. I have a license, Series 7, Series 55. And the most important thing that I learned in the beginning, it's a breakouts. It's the simplest strategy, but you have, as I said before, you have to have extensive knowledge of what you need to know in order to understand the breakout. So the rule number one for the breakout, first of all, I'll explain for you everything in pain, how does it work, and then I'll show you some pictures of the trades, so it's going to be easier for you to understand. So the thing number one, this is the level. You have to make sure that the level, whatever support or resistance, it's very, very strong. You cannot have weak levels. What are the weak levels? The weak levels, if you have a level which is churning all the time like this, you cannot take this level because it's definitely not going to be a limit buyer or a limit seller. So it's got to be a very strong level. It's either reversal or it's a paranormal bar. Most of you don't even know what's a paranormal bar. This is for example, everybody knows what's the ATR, right? The ATR is the average through range. So if you have a bar or whatever, the candle, and it's more than 2 ATR, it means there is definitely a much bigger volume and a completely different buyers and the sellers in this bar. So if you have a level which is been founded by paranormal bar, then you definitely can consider this as a strong level. So it's at a turnaround, false breakout or anything else, but you have to have a strong level. The stronger level, the easier is the breakout. So if you have a level which is completely clean, what does it mean clean? It has no churning, so it's clean level. Your chance to be in the beginning of the breakout is almost 100%. So the rule number one, it's a level. You have to have a very strong level. And most of you don't even know how to draw. So this is the worst part. So you have to have a level. Thing number two, you have to have an energy. So you have to make sure when you trade a breakout, you have to understand why instrument is going to go up or down. And the instrument goes down under three circumstances. Circumstances number one, it's the big amount of energy which is generated above the level or below the level. So this is the energy. What does it mean? The instrument goes like this. The longer it stays, the cleaner the level, the more energy you have for the breakout. So first of all, as I said, this is the energy. Second thing, it's counter trend. So it's a reversal move. So that if its stock goes up, then it has the energy to goes down. So this is the counter trend. That's where the instrument went one way and goes another. And the third one, it's completely uncontrollable. It's a news. So the news is something we cannot control. So when we see the instrument and the news goes up and down, we can only see if it's a strong news or not. So we'll go back. So now you have a level, and let's say you have an energy, right? And you want to trade the breakout to the upside. So you have energy, you have level, let's say it's at $31. Now the trading becomes very simple. As I said, if the level is clear, the most important thing is you have to put a buy stop in this case. If you're trading for the long side, if you're trading for the short side, so it's a sell stop limit and buy stop limit. I'll explain for you why limit. Maybe 1-3 penny above the market, above the level or below the level. So 1 to 3 cents up or down. Why? First of all, you should understand one thing. If the stock is going to go as a breakout, he'll take right here, especially if this was a huge accumulation. It will take definitely any stops which is out there or it's right here. So the most important thing to understand, don't put at the far stops because they're going to get taken, and then you're going to have an issue. Why? Because you're going to pay a lot for the buy stop. So why buy stop limit? Let's say 1 to 3 penny above the level, and you give 1 to, let's say, to 5 pennies purely for the stop limit. Why? Because usually in the breakouts you have a lot of slippages. So the instrument, for example, if it stays for a long time, it has a lot of shorts, and every short put in the stops right above the level. So if you're not gonna operate with a buy stop limit, you can get somewhere here. And what's the problem with the slippages? The problem with the slippages, you buy at the price you don't want to buy, you sell at the price you don't want to sell, and the worst part, you stop loss. So because you have to put a stop loss, right? Your stop loss is going to be much bigger. So my advice to you, when you put in a buy stop limit or sell stop limit order for the breakout, make sure you put only 1, 2, or 3 penny above the market, and you give the, let's say, stock 5 cents for the limit. Yes, of course, there's a volatility. For example, if you have a stocks which is trading $5 ATR per day, you can give it a little more. What's the formula? We usually with the traders, we use the formula, which is very simple. So you give 20% from your stop loss as the buy limit or sell limit. What does it mean? Let's say you have a stop loss of 50 cents, right? So it means the stock is very volatile. So the stop loss is 50 cents. So you can give the stock 10 cents at the most to go against you. So for example, let's say if there's a level of, let's say, $100, and you put a buy stop 100 or 1, this is the buy stop order, and if you put a buy stop limit 101, let's say to 110, that's the formula. We have it from 50 cents, so you take your stop loss, multiply by 20%, and you have a 10 cents. That's how much room you can give for the stock to go against you. So even if it goes against you 10 cents, it's okay, because you have plenty of stop losses to make money. So the most important thing, as I said, let's say, and if you do, you want to have a breakout on the sell side, so you go 99, so a penny below the level, and sell stop limit would be 10 cents below, so it would be 99.90. This is the worst price you're gonna pay, and this is the worst price you're gonna pay. The beautiful part is, if the stock is going far away from the level, you're always going to wait for your own price. In a breakout, the most important thing is to get the first impulse. So you're expecting for the stock to go fast, up or down. And this is the most important thing. So right now, I'm going to show you some examples, and then I'll show you the real chart so you'll understand. So here's a few examples for you to understand. As I said, the most important thing is the level. So you have 2 time frames. Always check the levels from a daily chart. Always. So this is the daily chart. Very important thing, you have to have a strong level. So this is the level, right? And then, only then, you see if there is enough energy. So right now you see that the stock is accumulating the energy for almost a month, which is enough to go. You should understand one thing. If the stock is accumulating a month or 2 or 3 months, it's very easy to get the first impulse. It's so simple. It's not a big deal. So you have to understand the energy, and you have to understand the impulse. That's very important thing. So you see right here in a 5-minute chart, it's very clear level. What does it mean, the clear level? You see in a 5-minute, we never broke this level. So it's a simple level. It has a lot of energy. It's a very strong level. It's a very nice price. So you see right here, you get in the money. So the stop is very short, because the volatility is not big. You see, the volatility is very small, so you have a very good breakout. Another example, see right here, very strong level. That's what I call paranormal bar, because you see all the bars are small and this bar is big. So it's a paranormal. You see right here, you have a limit seller, right? So it's a good price. You see right here, the person took a loss. Why? It's okay. It's not a big problem to take a loss because the level is very strong. First time the stock didn't go, you see? Second time the stock didn't go, and the third one he went in and he made the money, which is okay. If you have enough energy, and you have enough energy right here, you see, over a month, if you have a strong level, it's okay to re-enter the position. It's completely fine. So another one, you see, very strong level. After gap, stock is not pulling back, so it's a very strong level. It's the gap level. You see right here, it came back, and it was a very good breakout. And now I'll open for you the real chart. I'll open the e-signal. I don't know if many of you know, it's the program will cost you almost $300 a month. So I'll give you an example. Let's say the PayPal is not a good example, so we'll see something. Let's say Nvidia, right? So we have a level right here in Nvidia. It's a very strong level right here, the low of this bar for 1882. So that's what it is. So that's what we're doing. We're drawing the level first, you see, and second of all, we're waiting for the breakout of this level. So the level is it's not a strong level, but we'll find a good one. So right here we have the low of this level, 410.78, and then we'll go on the 5 minutes. See, 410.78. Now we're gonna find it right here, 410.78. You see, it's a very nice breakout. So that's what I do every single day. I'll show you right now. Every single day, I do the homework like this, where I put the levels. Then I see if there is energy. Like, for example, I'll give you a good example. It's a very good trade of mine. It's a Beyond Meat. So I'll give you right now the very good example. Okay, so we took it away. Take a look. So it's a very strong level for Beyond Meat, which came from May of last year. Very strong. Why? Because this was the low for the year. Usually, as anybody trade, they know the low for the year. It's a very strong level. So right here, they have a very strong level. You see, from that level, we'll pull back, and now we're coming back to $10 a share. So after we understand below $10 a share, it's definitely going to be a breakout. Why? Breakdown. First of all, we see a very strong level. Key number one. Second of all, do we have enough energy? I mean, it's May of this year. We have enough energy. Why? Because all of the people who participated in buying above $10 a share, below $10 a share, they're going to lose. All going to lose. So you definitely have enough energy for the stock to move down. You see? Very simple. First bar, breakdown, and look at this. 50%. So as I said, this is the real example. You see everything is blinking. It's not static. I trade every single day, only when I have a very strong position. And this is another stock. Before I show you that stock, I tell you the whole story about the stock. I wrote it to you because this is my trade. It's called Yeva. So you'll understand Yeva. First of all, the stock went down. Then the stock has a very strong level of $10 a share. You see, I'll tell you because I remember. I bought the stock at a little over $10 a share. It was I usually, every time I enter the trade, my trade supposed to be the intraday trade, and only if the stock behave very good, I take the stock much higher. So for example, right here, let's say I bought at 10.05, and the stock went up to $14 a share, 40%. So I sold it at, I think, at 13.60 or 13.70, I don't remember. And then it's completely going back to $10 a share. So I understand if it's going to break $10 because the level stays the same. And remember one thing, every round levels, 10, 11, 11.50, it's usually extremely strong. Look at this. I'll show you Yeva right now. So Yeva, you see, $10 a share, 40% up, $10 a share, break down 60%. So as I said, the most important thing, and I can teach anybody, I've done more than 1 million trades in my life. I used to do 3 to 4,000 trades a day, and it's not a scalping. I just bought, sold, bought, sold. So you can take a look, and if you're going to find the strong levels, it's a very easy to trade. It's a simple strategy, but you have to understand where the energy is coming from. So I'll give you an example. Tesla. Today we have, so you understand, October 26th of 2023. So you will understand that's, I'm giving you a live examples. So let's say Tesla. You see, it has a very strong level of 210. Why? You see, when the Tesla broke 210, it went all the way up. Usually when the stock is going back to the same level and a way back, it's not a good news. But in this case today, let's say at the level of 210, which was a very strong level. So let's see, at the level of 210 today, right here, you see, you could have easily made $3. Or yesterday, you see, once it touched 210, it never came back. So the level is very strong. As I said, level, energy, entrance point, entry point, very simple. Meta, you see, you're supposed to first finalize where is the strong level. The strong level for Meta was 290. You see, this is a very strong Meta. Why? Because below 290, everybody started losing the money. Everyone. All of these guys who was buying Meta from June, you see here, here, for 6 months, they're all losing money below 290. That's it. That's the very simple thing. Level, energy, entrance. That's it. That's the most important thing you should understand. So my advice to you for the future reference, go very slow. Do the homework. Take this like piece of paper like this, you see. I have it. I'll show you right now. Every single day. See, homework. Every single day I do the homework. My job is very simple. Identify levels which are strong. Identify there is an energy in a company, in a stock, in a chart, and then just entrance. If the stock goes against you, it's okay. You took a stop loss. But remember one very important thing. No indicators, nothing else. So simple. You just have to understand, learn, right? And you're never going to have issues. So good luck to you. I hope it was helpful, and we'll see you in the future.